Quick checklist here. Affordable Care Act, Patient Protection and Affordable Care, Obamacare. The individual mandate has been repealed. So you are no longer required to absolutely have it. I will tell you, one of the biggest challenges and one of the biggest missed cues on retiring early is the absolute exposure of healthcare. You can say, I'm 63, we're going to cut this thing off a couple years early and get out there and have fun. Make sure you know how you're going to get to 65 and get to Medicare. Alimony payments, big change there. They're no longer deductible to the person paying the alimony, and they're no longer taxable to the person earning it, right? So what does that mean? Well, it means going forward, alimony judgments, which there's fewer and fewer of those these days, much more lump sum settlements or very short-term payouts. Like we were married for 30 years, so, we decided to go our separate ways, so, your ex-spouse is on the payroll forever. You know what, hey, you built the assets together. Less of those these days, but what this also means is the alimony payments will likely be adjusted because you're not getting the offset on your income and you're not getting taxed on it, so the courts will likely adjust that. It is grandfathered if you're already doing it, but moving forward, likely changes in that. You know what? It's going to come out in the wash, so it's probably not costing either side, but what the numbers are based on the tax benefit or the tax cost, going to change dramatically how that is divvied up. Again, we talked about miscellaneous itemized deductions, tax preparation, investment advisory, your IRA custodial account fee, 50 bucks to hold the IRA or whatever the number is. That's all gone away, but that's reasonably small numbers. Here's a big one, 529 plans. You want to help out the grandkids, so you're going to put a little bit of money away in these tax-deferred growth vehicles, and as long as they use it for qualified education expenses, right? It's kind of a Roth IRA for educational costs. That's been expanded dramatically now. It's not just for universities or colleges anymore. You can use it for private pay elementary and secondary schools. So you want to put your kids into charter schools or put them into privately run schools, you can use 529 plans now for that. So again, not just for the college expenses. And this is one that's kind of interesting. If you have a significant casualty loss of property, used to be able to deduct that as a capital loss. Now it has to be in a federally declared disaster area. So if you're in Panama City right now, you got a tax break coming. If your house burns down in Lima, probably not.